Inflation is often described as the silent thief because it erodes the purchasing power of your money over time. While you may not notice its immediate effects, inflation gradually increases the cost of living, making it harder to maintain your lifestyle. Even if your salary stays the same, inflation means you're effectively earning less. Here are the top 10 ways inflation is secretly making you poorer. 1. Higher grocery prices. One of the most noticeable effects of inflation is the rising cost of food. Everyday essentials like bread, milk, and meat become more expensive, forcing you to spend more on groceries while getting less for your money. This hidden cost adds up over time and strains household budgets. 2. Rising housing costs. Inflation pushes up housing prices, making it more expensive to buy or rent a home. Even if you already own property, maintenance costs, property taxes, and homeowners' insurance premiums tend to rise with inflation, increasing your overall expenses. 3. Decreased savings value. If you're saving money in a low-interest bank account, inflation can quietly reduce its value. When inflation grows faster than your savings interest rate, the purchasing power of your money declines, meaning you can afford less in the future. 4. Increased transportation expenses. Gasoline, car maintenance, and public transportation fares rise with inflation. This means commuting to work, running errands, or traveling becomes more expensive over time, eating into your disposable income. 5. Reduced purchasing power of your salary. Even if your salary stays the same, inflation reduces what it can buy. A paycheck that covered all your needs a few years ago might not be enough today. If wages don't keep up with inflation, you're effectively earning less. 6. Higher interest rates on loans and credit cards. As inflation rises, central banks may increase interest rates to control it. This makes borrowing more expensive, leading to higher mortgage rates, personal loan costs, and credit card interest payments. Debt becomes harder to manage, putting more strain on finances. 7. Increased healthcare costs. Medical expenses, including doctor visits, prescription drugs, and insurance premiums, tend to rise with inflation. This means you may end up paying more for healthcare, even if you have insurance coverage. 8. Reduced value of fixed income investments. If you rely on fixed income investments like bonds or annuities, inflation can decrease their real value. Since these investments offer fixed returns, inflation erodes their purchasing power, making them less effective at preserving wealth. 9. More expensive everyday services. Inflation doesn't just affect big purchases. It also impacts daily expenses like dining out, haircuts, gym memberships, and streaming services. The gradual increase in these costs forces you to cut back on leisure activities. 10. Higher education costs. Tuition fees and student loan interest rates often rise due to inflation, making it more expensive to pursue higher education. This can lead to increased student debt, putting financial pressure on students and families. Inflation slowly reduces the value of your money, making everything from groceries to housing and healthcare more expensive. While it may not be obvious at first, the cumulative effect can significantly impact your financial stability. To combat inflation, consider investing wisely, negotiating salary increases, and reducing unnecessary expenses. Staying informed and proactive can help protect your financial future.